Hey there, money making friends, and welcome back to Trading Made Easy. Now, this is for those of you who've relied on an advisor but want to understand the markets and make your own moves, and you're in the right place. I'm a CFP with over 20 years of experience managing real investments for long term growth, not just chasing quick profits. I'll show you the strategies to trade confidently, whether it's alongside your advisor or going solo. Now, if that sounds like you, go ahead and hit that subscribe button below and let's get started. Today, I want to cover some of the recent swings that we've seen in the market and break down what's happened, what a market correction really is, and most importantly, where we might go from here. Now, one of the biggest keys to making your own moves with your money comes down to learning trends and cycles so that you can get a little bit more comfortable making decisions and taking leaps while you minimize the risks to your portfolio. So, first of all, let's look here and see what happened. Over the past month, we've seen a stock market correction that is generally defined as a drop of more than 10%, but less than 20%. Now, you'll often hear this referred to as a dip or a pullback, and this isn't unusual. It happens on average every 1.2 years. It's been a little bit longer than that, so a lot of us are a little on edge and may have forgotten what it feels like. In fact, most people didn't realize that back in 2022, we actually had four market corrections. And then there's another one that happened in 2023. The smaller pullbacks of 5% or more happen several times a year. It's just kind of how the market breathes. But if you're new to tracking the market daily or you've just started to invest on your own, this might feel like a big deal. But truly, it is normal. And more importantly, these are going to create opportunities. So you think of it like your favorite brand going on sale. Let's look at the S&P over this period. Now, if we go back, I'm going to throw up a year-to-date chart, and you can see here that back on February 19th is when we actually hit our high. We trace that all the way from our high on February 14th, all the way down here to March 13th. That's where our definition of a correction occurred. We dropped just over 10%. You can see we've actually rebounded since then. We've actually come up about 4%. So you can see here, this is where we're at today as of March 27th. So the question really is where we're going to go from here. One of the really interesting things here, this is the Magnificent Seven. On average, these stocks have actually dropped about 17%, with Tesla alone down over 30%. Now, that's pretty scary, and you can see that they've carried the weight of this drop. But the truth is that about 5 years from now, we're going to probably look back at these prices and wonder why we even hesitated. But again, it's easier in hindsight than it is right now when we have all of these unknowns. Now, the real question is what comes next? Where do we go from here? The market always moves in cycles. Remember that. And history tells us that after a correction, we have two main paths. The first is a recovery. So if sentiment improves, and let's look here at our chart, we could recover right back to our highs. So from this point forward, we could jump right back up here and be over 6,200. No problemo. So that's one path that we could take. And that actually happens more often than not. So keep that in mind. The other option is a true bear market. And a bear market is defined as a decline that continues past 20%. So again, having had a correction, and a correction is anything between 10 and 20%. If we go over that 20% mark, we've officially hit a bear market. And that's usually tied to larger economic concerns, things like falling earnings or inflation or major policy shifts. And some of that could be determined over the next few weeks as we see these tariffs and policies play out. Now, if that's the case, I'm going to actually roll this chart all the way back to a 1 year mark. So again, we look all the way back at a 1 year mark. Even if from this being our point right now, if we were to drop all the way down, that would drop us down here. And if we actually look at this chart, you're going to see that in reality, it really sends us back to what are we, April 2024. You can actually see all of 2024 back here on this chart. Let me run back to a 5 year chart here on this. Look at this. These are my little lines here. That is a bear market. Can you imagine when you look back at 2024 and 2023, how tiny that looks in the scheme of things? I always like to put that into perspective. So again, we haven't even gotten back to our lows back in the beginning of 2024, and that's with a full bear market. So this is where investor psychology really comes in. The market is rational. We are not. It will always return to the mean. When we're thinking that prices will only get better, what you're going to end up doing is really missing out on the moment. And it's like adding to your online shopping cart and watching that price drop and you hesitate and then boom, it's back at full price. It is so frustrating. And at some point, it's just better to pull that trigger at a price that you're happy with and move on. Don't aim for the exact cheapest moment to buy something. That's really all that it comes down to. So, again, the question is, what should you do? If you're feeling uncertain, start small. Instead of going all in, think of this like moving the ball down the field with short, smart plays instead of trying to throw the Hail Mary passes. We really have no idea where we're going to be in 6 months from now. Buying in stages or selling options far out of the money can be a great way to participate without taking on too much of that risk. The biggest takeaway is that you need to stay in the game. Market moves create opportunities, and if you have a strategy, you won't let the volatility knock you out of the game in one or two moves. Let me know in the comments. Are you buying anything right now? Are you waiting for a bigger sale? Let's talk about it and have a conversation. Again, if this helped, hit that like and subscribe button below. I'll be back next week with more ways to make trading easy. Have a good one.